I'm going to do a market review, but I'm going to do it a little differently. Basically, the reason most people want a market review is because they want to look into the future, not the past. They want to know what's going to happen with the market. So let's look at the past to try and get an indication of where we're going in the future. That's what I'm going to do in this video. I will give you a few numbers of what's going on in the market, but I'm also going to show you a lot of other things that are going to give you a whole different perspective on where things are going. Probably a different perspective than what you're hearing out there on YouTube if you're watching videos on what's going to happen with the real estate market. My name is Brian Johnson, and I'm a real estate broker right here in Spokane with Windermere Valley, Liberty Lake. If you have any questions about real estate, my contact information is right below. My YouTube clients are my favorite clients, so don't be shy about reaching out if you want to buy or sell in Spokane. Also, I have a really nice buyer's guide and a really nice seller's guide. It's on the process of buying a house or the process of selling a house. I'll leave links in the description below and I'll pin it to the first comment. And these are direct links. You can download the guide directly. I'm not going to collect your email address or anything like that. You can just go ahead and download these guides. And my contact information is in the guide. So if you want to reach out to me, there's a way to do that. So these numbers are pulled directly from the MLS. Domus Analytics is what we use to pull stats from the MLS. So let's go ahead and take a look right here. I want to show you guys this. So the median sales price for December is $384,000. And look at this trend line right here. About a year ago, it was $390,000. So this year in pricing, we have basically erased the gains that we've made this year. You can see that right here on this graph. We've basically erased all of our gains. Now, looking a little further, a lot of these numbers are interesting. You can see what they mean right here. List price received, that's pretty interesting. We're basically back down again. We've erased our gains. But look at the sold price per square foot. Down 3.9% from last month, or from November, down 2% from a year ago. So we've erased the gains of this year. So we've basically gone back 1 year in our pricing right here. New listings, same story. Pending sales, a little bit less. And then active inventory, we're headed right back down, but I'll show you more of that in a minute. And then month's supply of inventory of 1.7, so that we're down a lot compared to last month, but we're way, way up compared to a year ago. Now, that's not the interesting things I want to show you. That tells us what happened last year. Basically, last year, we just went back to what it was the year before. We erased our gains, but where's it going into the future? Let me show you. So this right here, this is the average price per square foot. All homes in Spokane County. I left out condos, but this is just all homes in Spokane County so we can get a good average. And you can see right here, we've had a big jump in the average price. But look at this graph. This is over the last 15 years. So this part of the graph, you can see where my mouse is. Right up to here is basically the tail end of the housing recession that started in 2006. That went on for about 5 or 6 years, depending on where you want to start looking at it or where you want to stop looking at it. But right about here is where we started coming out of that big loss, the big crash. Now, this graph doesn't go before that big crash, so these numbers were, if you can still see my mouse, we're right around here, goes down. But look at the number of years it took. And if you look at the pricing, that's a crash. This was definitely considered bad news in the crash, but look at it. Whoa, okay. Also, what happened here is all these builders went out of business and we stopped building houses. That's important because those builders, we didn't come back from that yet. So we still need housing, and this is the problem. So we see this run up on pricing that's coming up before the big shutdowns and all that. And then obviously during the shutdowns, we had a massive run up in pricing. So days on market, you can see here we are right here. On the right-hand side, days on market, we're not even close to where we were the average for the last 15 years. Now, here's a different way of looking at that average and median price. The blue here is your median pricing. Again, this is over the last 15 years. The red is the average sold price, and the green is the ones listed for sale. So let's ignore the green. But if you're looking at this trend line, look at where my mouse is going. Where's it headed? Obviously, we're going to be in a correction, and we've corrected a lot. But these corrections take years, you guys. They don't take months. They take years. If we're in a housing correction, a big one, it's going to take the next 5 years. If that happens, look what happened last time. This is how it went down. On a graph like this is not severe. I'm assuming we're not talking about an everything crash with the economy. I'm isolating it just to real estate. If we have an everything crash in the economy, which a lot of people are predicting, that's a whole different story, and I can't even address what's going to happen because then everything's just wiped out, not just real estate. We're all doomed. But looking at this on the right-hand side, if we're to go back to historical trends, we'll probably keep going back down a little bit, but you're going to see it go back down. It's going to level out just like this right here over the next couple years. It's going to be boring. Check this out. Why is this happening? Look at this right here. This is inventory. This tells the whole story. This is the problem. If we want to get back to historical, just averages, we need that inventory not just to double from where it is today, but probably triple or even more than that just to get back to some sort of a normal situation. So look at all this inventory during that last crash. Look at this right here. We don't have that inventory. Here's a massive, massive problem because people that have a 3 or 2.5% mortgage, I will tell you this right now. If you have a 2.5% or a 2% mortgage and you want to move up in housing, so you want to sell your $300,000, $400,000, or $500,000 house and go to a $700,000 or $800,000 house, you know what? I would recommend getting bunk beds if you need another bedroom because I wouldn't recommend selling your house. That mortgage at 2% that you might have, anything under 3%, that's almost an asset. That debt is so cheap, it's almost an asset. And this is the problem. People don't want to do a lot of move up purchasing because you could go and maybe what should have been a slight bump in prices to move up because of interest rates. Now you're looking at a massive jump in prices just to move up. And really, people aren't going to be doubling their payment to add a bedroom. They're just not. It doesn't make any sense when you can do a home equity loan and start doing work on your house. And everyone can do a home equity loan right now because we have so much equity in the market. Spokane is an equity-rich market, meaning over 64% of all houses in Spokane. That's probably going down a little bit, but more than 50% of all houses in Spokane have more than 50% equity. So people have a lot of room to grab home equity lines of credit to basically do those things to their house so they don't have to do a move-up purchase and double their payment. That's the story right now. I would recommend that to anybody. If you're looking to sell, you really want to know why. If you have to sell, you have to sell. Let's get that done. There's a lot of reasons. Also, if you're moving down, that's different. And if you're paying cash, that's different. If you're a cash buyer, the rules are a little different right now because you're not looking at 7% or 6 or even 5.5% interest. Actually, they've gone down. We're about 5.5%, maybe around 6% interest right now. But, you know, financed buyers right now, finance sellers, I wouldn't recommend right now anyone selling unless you have to do it or you're moving down. If you're selling and you have to get financing for your next purchase, you need to be hyper aware of why you're doing that, and that basically is the last resort. Might be the case. If it is, give me a call. Even if you're stuck in a tough situation and you don't quite know how to manage this and you have some questions, feel free to reach out to me privately if you'd like. My contact information is below. Or you can leave questions down below in the comments and I'd be happy to answer them there. Any questions that you have, other people are asking too. So feel free to put those questions down there and I'll answer them. So that's kind of a market report, you guys. I think what's going to happen over the next year is it's going to be kind of boring with some slight decreases in prices. But if interest rates start going back down again, which people are talking about by the end of the year, that's going to spur a lot of buyers to start acting again. And since sellers aren't putting their properties on the market like they used to, we're going to go back to another inflation point in real estate, and it's going to start going up again. I don't know if that's good news or bad news. It depends if you're a seller or a buyer. And again, this isn't a guarantee, it's predictions. And if we see the entire market going down, the entire economy going down because we're so overloaded with debt, then that's a whole different story. That would bring everything down and really, well, what else are you going to do at that point? I'd still keep my money in real estate. I don't want to put my money in the stock market if everything's going to be crashing. I'd rather put it in a hard asset like gold and real estate. My name is Brian Johnson. Any questions, feel free to reach out. Thanks again, you guys.